like smoking Joe Frazier, the Hellraiser. Raising hell with the flavor. Terrorize the jam like troops in Pakistan. Swinging through your town like your neighborhood Spider-Man. So all tick-tock keep ticking. When I get you flipping off the shit, I'm kicking. The Lone Ranger, pro-red, danger. Deep in the dark with the art. To what they talk apart. The vandal, too hot to handle your battle. You're saying goodbye, let's be careful. Up next, inspect the decks on the set. The rebel, I make more noise than heavy metal. The way I make the crowd go wild. Sit back, relax, full style. Ray got it going on, pal. Call me the rap assassinator. Rhymes rugged and built like Schwarzenegger. And I'ma get mad deep like a threat. Blow up your project, then take all your assets. Cause I came to shake the frame in half with the thoughts that wrong. Like now, so if you
Yo, 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 yo. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I'm returned today to weapon tap on your head with more ADH wealth solutions. Raymond, what's going on, bro? So today is going to be actually pretty short. Tomorrow is my 39th birthday. So I'm entering the last year of my my 30s. And it's an interesting period in my life. At any rate, so today, I guess in line with things like, market making Mondays and all that stuff that I could title it. I don't, I'm not the best title creator, but it is what it is. Thank you, AM1. So today, what I'm going to do is I'm going to be finishing up the book by Mark J. Quan, top 25 ways an IUL can secure your financial future and build a tax-free family bank. So I finished number 25 yesterday. Numbers 25 and the bonus number 26. And thank you, Raymond. Thank you for the birthday love, y'all. Ladies and gentlemen, if you're enjoying my content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Marty was good. I still got to get back with you too. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional to purchase life insurance directly up to $2 million with an instant decision and no medical exam, or for a do-it-yourself financial plan, the links are in the description of this video. So today I'm going to talk about, and Marty, this will probably excite you too. I recommend you get a copy of this. Well, I guess you don't need the copy of the book, right? You got me. I was actually, ironically enough, I'm gonna kind of just flow with this show, but AM1 was just on. I was speaking with him. We were speaking about, resources, et cetera, et cetera. And I was explaining, I came to the space to sell insurance, right? To be honest, I came here. I don't really care nothing about maintaining relationships. I'm married. Where you put your thing don't affect me in no way. As long as you're out there, you're safe and you ain't hurting, me and mine, we're good. But on the same token, I also do have a thing about advocacy, and I don't want to see other young brothers go through what I went through. Prime example, AM1 is willing to interview me on his platform. And I'm willing to do anything to get the word out in regards to, my story of why I started selling life insurance, which was 2008, 3 days before Mother's Day. I got shot 5 times in front of my mother in the Trey 4. That's Winston-Salem, North Carolina, for those who are unfamiliar with the area. I spent 14 hours in the hospital. I got hit in a bullet grazed the top of my right ear, the top left of my head, went into my top left shoulder, out of my left back, grazed my left elbow. And so, basically I was hit 5 times. And, my mother was standing there seeing this happen to me. It goes a little deeper than that, ironically enough, which is why, for example, AM1, I understand a lot of what a lot of guys in this quote unquote space may be distrusting of women. For example, the reason I got shot 5 times was because of a chick. She set me up. Long story short is that it's deeper than that. But there's also the fact of there's a certain lifestyle I was living that would lead me to be in situations where a female would set me up to be killed. It's unfortunate, but it's the reality of the situation. So I can't absolve myself of my role in that situation. However, moving forward, we're going to be reading today from the end of, let me see, let me go ahead and turn on the camera really quick so I can show you guys I'm showing you guys my bedroom. Well, here we go. Top 25 ways an IUL can secure your financial future and build a tax-free bank. And that is by Mark Jaquan. And so we're going to read the last little bit of it and do some interactivity. Especially since we got my man Marty in the building. I might throw a little flex on him, Marty, if you don't mind, and throw some of them numbers we're working on out there, bro. Because what you and I are doing is, I think, what AM1 would like to see more of, and like stuff like me being promoted. Yes, selfish plug there. But channel content like mine is likely what he'd like to see be more promoted. Um, but to that argument, I also do say I do got to make, my type of content does have to be a little more entertaining. Like you said, it's probably going to be a little bit dry, right? Just because it's the merit of, well, shit, what it is, right? So anyway, today we're going to read a little bit of the end of it, which is the top 10 questions to ask before getting hitched to your IUL. So here's the cool thing, actually. Marty, if you don't mind, I'm going to drop some numbers on them really quick. So Marty, and I'm not gonna do the whole, if the only way your whole story is getting told, Marty, is if you and I do it together, either on your platform or mine. But I wouldn't tell you the whole story without you there. But there's a situation where in Marty's IUL, he's paying $1,000 a month on his life insurance policy. Okay, this is a man who is he's a single man. So single, no kids, no wife currently, but he's spending $1,000 a month on his life insurance. Now, AM1, I heard you mention people like Ramil and Thai City. We actually went on Ramil's channel and tried to talk about this, and we got cut off. Again, maybe it's dry, but when we're talking about the way Marty did it, it's actually very fly. Because now Marty's got money for the rest of his life. And he's not an old dude. I'll put it to you like that. So again, ladies and gentlemen, if you're enjoying the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. So, the top 10 questions to ask before getting hitched to your IUL. So, one, was it the right time and topic at the time? AM1, I'm not 1,000% sure what I'm assuming you're asking with me and Marty's strategy, was it the right time and topic at the time? And yes, it was. We actually, ironically enough, we got introduced through a space panel. And there's another gentleman in this space by the name of Sheed We Hear, who, as much as I talk about Marty with the money, I find it humongous that Sheed We Hear is one of my clients, because he not only trusts me with himself, but he trusts me with his children. And I think, that's humongous. Though someone said something to me that was funny, because I also manage my mother-in-law's retirement, and they were like, "Oh wow, she must really like you." I mean, it's one thing for her to let you have her daughter, but for her to let you have her money, yeah. Listen, you can ask Marty right here. He's in the chat. We were both on the panel. We got to talking. Ramil shut us down. And we were definitely talking about money, because we're talking over the tune of $500,000 here. So, but $500,000 is also a big number, and that's hard for the average person, let alone the average black man in America, to grasp their head around. Too many O's. Big fat. Not enough shiny belt buckles, Marty. Not enough shiny belt buckles. So, question one that you want to ask is, what is the purpose of this IUL for me? I'm assuming that's what your idea was for the first question is, what is the right time and topic at the time for your IUL? So yeah, the first and main purpose of an IUL is both permanent life insurance and long-term care for asset protection. But what are your other purposes in purchasing an IUL? Okay, now he has some other questions there, but before I go into that, we need to discuss what he just mentioned here about long-term care for asset protection, because not all IULs are created equal. Certain IULs are set for asset or wealth generation, and some IULs are created for asset protection because they're a hybrid and they have a long-term care aspect attached to them. It's really deep. It's just like people will tell you buy term insurance and invest the rest. The next time somebody says that, say, okay, what type of term should I buy? Now, they'll think you're talking about in terms of years, 10, 20, or 30. And then they'll say, oh, 20 years the most common. And you'll say, no, I mean, what type of term should I buy? Okay. And then, ladies and gentlemen, we're going to have, oh, snap. We're going to have a quick class here. I'm going to type these types of term into the chat, and I want you to look them up. Level term. I hate the way StreamYard fucking works. Increasing term. Well, at least from your phone. Decreasing term. What's this here? ROP. Return of premium term. Convertible term. Now, from all those different types of term insurance that I put in there, next time Dave Ramsey or Sue Zorman says buy term, invest the rest, ask them which type of term is the best. And then they'll be like, what? Now, before I continue in this book, because IUL is almost literally like buying term and investing the difference. Because prime example with me and Marty, our strategy, I don't believe anybody should pay for life insurance for their whole life, even though they have a whole life policy. So he has a policy that's going to continue to build cash value, but we're only paying for it for 10 years. I'm listening. What's going on? So now let's look at really quickly before I go back into the book, a little bit of these terms or types of terms. And ladies and gentlemen, if you're enjoying the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So now let's look at level term. So level term is literally that. You buy a $100,000 death benefit for the most commonly purchased term policy is a 20-year. So you're 40. You're 44 years old. You buy a 20-year term. That takes you to 64. So if you die anywhere between 44 and 63 and a half, your family gets that $250,000. However, the moment you turn 64, that term insurance policy is gone. And you haven't died, and you get nothing for the term insurance, and your family gets no death benefit if you die the very next day after your term policy expires, even though you've been paying into it for the last 20 years. And 20 years, as we know, goes by really fast, doesn't it, gentlemen who are in our 40s? You fucking blink and you're 20. Dude, I looked up. I graduated high school 22 years ago. What the shit? So now let's look at increasing term. So there's a couple of ways that increasing term works. So increasing term generally has to do with your premium, not your death benefit. So the way that increasing term generally works is as time goes on, for example, that same scenario, you're 40 years old, you buy a $250,000 death benefit, it costs you $500 a year from 40 to 45. What's going on, Just Gas, y'all? At 45, I lost where was I? Here we go. At 45, the price now is $1,000 a year for the same $250,000 death benefit. At 50, it's $1,500 a year. And then at 55, it's $2,000 a year. And then finally at 60, the policy is done. And you have no more $250,000 death benefit. And that's the end of it. Again, this isn't, the exact of it. I'm giving you the 30,000 foot view. But this is how that works. So now next, we have decreasing term. So what is decreasing term? Well, that means that it's almost like increasing term, but in reverse, right? They really don't make decreasing term or increasing. Well, they still do have increasing term. You'll get it in companies like Primerica. But decreasing term used to be for mortgage, right? You may have heard it as mortgage protection life insurance, which is just a 30-year term. And usually today, the way we sell it is, oh yeah, Mr. Hall, you need a mortgage protection life. You just closed on your house? Yeah, okay, great. How much is your mortgage? $250,000? Yep. Okay, we're going to get you this 30-year, $250,000 term policy. It's going to be 75. It's going to be $300 a year. Cool. I'll take it. And now I think, well, hey, if I die, my house is paid off. But I'll show you some other strategies that you can use in IUL to actually beat that. Again, we're going to be going through the questions. So the way decreasing term works is, hey, to Triv, what's good? Jonathan, what's popping? So the way decreasing term works is you have a death benefit that decreases. So let's use that same scenario, that $250,000 death benefit, and it's a 30-year term, and it's a 30-year mortgage. So the assumption is that over time, I'm paying off my mortgage, so I'm not going to need that much death benefit. So every year, the death benefit goes down. So year one, I'm paying $500 a year for $250,000 death benefit. Year 10, I'm paying the same $500 a year, but it's for $100,000 death benefit or $200,000 death benefit. Year 20 is $150,000 death benefit. Year 25 is $100,000 death benefit. And supposedly by year 30, you have no more of a death benefit. So your insurance policy is gone. Now we're going to look at my favorite type of term policy, which is ROP. What is ROP? That stands for return of premium. So how does ROP term work? So the way ROP term works is you get, let's use that same scenario, a $250,000 death benefit for the 30 years. All right, let's use 20 years because that's the most commonly sold term insurance. So a $250,000 death benefit for 20 years, but you have ROP. So return of premium is going to be a little bit more expensive than, the $500 a year was with the others. So this one is going to be $650 a year for 20 years. But at the end of that 20 years, they're going to give me all the premiums that I paid into the policy over the last 20 years back in a lump sum. Okay, so there's a little bit of a cash value component to your term insurance policy. So again, when somebody says buy term, invest the difference, you want to ask them which term you're talking about. So now, lastly, another one of my favorite types of term, if you're going to get it, is a convertible term. So how does a convertible term work? So simply put, a convertible term is a generally a level term policy. So let's say it's a 20-year term, the most commonly sold term policy in existence. You will, at the end of that, coming anywhere during that term policy, you have the option to convert some or all of the death benefit to a permanent policy. So let's say I have the $250,000 death benefit and it costs me $500 a year. But then I want to get just a traditional whole life. Well, that's going to cost me $250 a month. Right. So in 2 months, I paid for $100,000 death benefit, which I paid that in a year. I paid double that in a year for a $250,000 death benefit. Well, why would I do that? Well, permanent insurance has its benefits. There's bells and whistles to it. What I generally compare life insurance policies to, folks, is vehicle models. So the beauty about a term insurance policy is at the end of your term, you have the option to convert the term policy to permanent insurance. Now, why would that be something that exists that all companies do, even when you get term? Because you may not be insurable 20 years from now, right? So, yeah, today I'm 25, I'm healthy, da 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 da. There are reasons why men in these spaces are upset. Why? Because they got to use the blue pill for real. I'm talking about Viagra, y'all. Right? But they got to use the blue pill for real. Great deal for all the premium bag. Yeah, it can be a good deal. Just ask Shaw. So what happens is, um, you lock yourself into the protection of being able to be insured because people are living a lot longer. People are like, oh, by 60, man, I ain't worried about that. I ain't gonna live till that long. We all say that. Well, let me tell you something. Again, I told you guys my story of being shot 5 times in front of my mother in 2008, right? I come from New Haven, Connecticut. It's not what you think of when you think of the hood. Because when you think of New Haven, Connecticut, you think of Blue Bloods and Yale University. You don't think of Blue Bloods and gangbangers. Well, I was young and wild and free running around out here as a teenager, and a lot of us didn't expect to make it to the age of 21 in this small city with a population of 131,000 people. We didn't expect to make it to a certain age. So look at me here about to have another birthday and end my 30s. Yet I didn't think I was going to live till 21. That wasn't part of the plan. I was supposed to die for the hood. That's what we did. Rode for the hood and did ridiculous stuff. Mulatto, what's going on? How are you? So convertible term is very important because it locks you in and you can convert portion of it without a physical or a health exam to a permanent policy. So there we go. So now let me get back to the book. I'm sorry, y'all. I like to go off on these tangents because these books, the difficult thing about books like these is you would think that, oh man, why are they saying this stuff? Because they're teaching people the tricks. They're just giving you a 30,000-foot view. That's why they always say it's important to work with a qualified professional who understands how this stuff works. See, it's one thing to read it in the book and read to you about how an IUL can do this and how an IUL can do that. It's another thing to actually be able to actually practically apply it. I'll give you an example. I'm not going to put the agent on blast, but I had an agent who was excited about selling their first infinite banking product. They were like, hey, great, knowledge and relationships, what's going on? So the agent was like, hey, great, I'm excited. I just sold my first infinite banking. And in quotations, they put IUL. And so I had to run to the agent. I was like, yo, be careful when you do that, because just because you sell someone an IUL does not mean that it's an infinite banking product. And what happens is, in this industry, there's a couple of reasons why a lot of, like principles in this book and stuff you can read about, and, you can get an IUL, but not have what you think you have, right? So, it's like saying, I got a basketball hoop, but it's a Nerf hoop. Well, it's still technically a basketball hoop because you can put a basketball inside of the Nerf hoop, but it's different than a regulation basketball hoop that they playing in the playoffs on right now today. You see what I'm saying? Your AAU team or even the top collegiate team can't really run with the worst NBA team. It's just levels to it. Right? So that's why I interject what I interject in there, because I actually have a grasp of this stuff. And I run across agents every day. I ran across another agent. Ironically enough, that agent now works with me and she's aware of these things, but she was with a company called Primerica. And while she was, oh shit, what just dropped on my foot? While she was with Primerica, they had her, Mr. I ain't seen you in a minute, my guy. Yeah, it's crazy, man. I don't adhere to this YouTube stuff too heavy, but I realized I've actually been told by people that you guys appreciate my content. So, I definitely want to continue to deliver. And it's translated into real life relationships where myself and some of you, my subscribers, have done transactions and done business together. So, I'm definitely appreciative of you guys' appreciation. But anyway, back to the story. So this young lady, who is licensed to sell a particular product, was unaware that she was able to sell the product. So what ended up happening was, and anyone who's in here who's licensed, who's been with one of the companies any of the companies I'm about to name, FFL, WFG, PHP, or Primerica, have all probably felt the sting of giving up your Project 200 to your upline and all this other nonsense, right? And so one of the major difficulties is a lot of agents don't do things like come to the trainings, right? And it becomes a lot because they want you to come to this meeting, and that meeting, and this meeting, and that meeting, and juice by David. I'm not no MLM guy, right? So it's a little different with me. Like, I'm about to educate folks, right? I'm eating candy, y'all, because I got some candy for my birthday from my wife. She went to the store in New York, in Brooklyn, or in Manhattan. I think it's in Brooklyn on Delancey Street. No, that's what's up. Well, I'm glad you've been watching for a while, bro. I try to keep my content, strictly business, but I'm like Tupac, right? I'm a human. I'm ever evolving, and real life actually affects me. And then YouTube is kind of also a place you can vent a little bit, but it's also like a 24/7 commercial, right? Everywhere I go, obviously, I talk about what I do, but that's because it impacts people in a way that they don't know. Prime example, there's a book here, a book showing 25 ways a life insurance can secure your financial future. And it says top 25 ways, meaning that there are more than 25 ways that life insurance can secure your financial future and build a tax-free family bank, right? So, but again, this other agent, she didn't even know she could sell annuities, right? Because the company that she was with, again, WFG, PHP, FFL, or PRI, which is Primerica, People Helping People, World Financial Group, or Family First Life. If you have an agent that's with them, unfortunately run, right? But the reality is it's not about the company, it is about the representative. And the way those companies are set up, specifically FFL, I don't quite know. PHP is kind of, well, the difficulty with FFL is they screw their agents, right? But the way they screw their agents is because they make you buy leads. What is a lead? That means that you're paying for the name and telephone number of a particular individual for the purposes of contacting them to purchase your product and or service. So FFL, or Family First Life, requires all their agents, especially the new ones, when they're coming in with no experience and probably little money, to spend at least $1,000 per week on names and telephone numbers to telemarket to people. Then makes them telemarket to people. But they tell them that they're exclusive leads and they're not exclusive. Yeah. If they're with FFL, PHP, WFG, or Primerica, run. And it's not their fault. It's the way that they're trained. Right? So even agents with reputable companies, they get trained to be transactional. So it becomes it's very scary because people become transactional and then they don't understand a lot of these principles or how to apply them to a person's life, right? So back to the top 10 questions to ask. Number one, what's the purpose of the IUL, right? So again, of course, the first and main purposes of an IUL are both permanent life insurance and long-term care for asset protection. But what are your other purposes in purchasing an IUL? Do we want to use an alternative no-loss investment strategy to complement our stocks, bonds, and real estate? Will it be used to provide a down payment to buy real estate? Is it to provide a down payment to our son or daughter when they buy a home? Well, damn, that's 3 ways that your IUL can be used for wealth, and those are just questions. Is it to provide a tax-free supplemental retirement income? Generally, the way I do this is when I sit with people, I say, what do you want your life insurance to do for you? And most people have no fucking clue because they have no clue. They're like, I wanted to give somebody a check when I die. Isn't that what it's for? And it's not. Again, we just said, will it be used to provide a down payment for a house or a down payment for my kid's house? Do you want to use this for college funding or education costs? And one, if you're here, like I said, I can show you how to use your life insurance instead of a Section 529. Is it to provide a tax-free supplemental retirement income? Will we use it to start a business? Do we want to borrow to invest in the stock market or purchase other investments when the prices are low? Is it to shelter a tax-free inheritance back into tax-exempt investments? Do we want to build it to pay off our real estate before retirement? Will it be used as an executive bonus plan for my business? And this is all in question one. Will it provide an incentive to keep our best employees? Or maybe your purpose is something completely different. What up, Laro? Ladies and gentlemen, if you're enjoying the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Intellectual Soapbox was good. Aries Gang in the building. My birthday is tomorrow, April 18th. So I'm celebrating by reading the last of this book, Top 25 Ways an IUL Can Secure Your Financial Future and Build a Tax-Free Family Bank. Excuse me while I munch on this Starburst. And like just as Shar said, share. But as you can see, folks, those were a multitude of questions to ask from just the first question of the IUL. Right? So, thank you, Intellectual. Now, question number 2. And this is a very important question because this has an effect on what the agent, how the agent works. Is it in your best interest or is it in their best interest? So a lot of people will tell you, hey, listen, I'm a CFP, I'm a this, I'm a that. I want it for that supplemental income. All I need is $24K a year also to use it as collateral for loans. Well, Mr. That's a possibility. Like I said, actually, there's a link in the description. Everybody should be using it to a DIY retirement plan. And the computer will actually help and adjust some of your numbers when you put them in there. Now, generally, it'll send a report to me, and then I can reach out to you and discuss, hey, mister, you got this 24K a year goal, but in order to reach that, right now, you're going to need to save 26K a year in order to get that, or whatever it might be. Obviously, arbitrary numbers. But so question number 2 is very important because it has an effect or an impact on what the agent does in terms of the products that they can offer you and whose behalf they're working on. Is it yours or is it theirs? Or is it theirs, meaning the company, not them, the agent themselves, but the company because they are what's called captive. So question number 2. Is the insurance agent captive? Right? So if the agent's company name on their business card is the same as on the policy they are selling, they may be captive. For example, if somebody sells you a policy and they're with New York Life, and I hand you a business card and it says Alonzo Hall, New York Life agent, that means I'm captive and I work for New York Life as an agent. However, if I hand you a business card and it says Alonzo Hall ADH Wealth Solutions, that means I am independent or a broker. And what that means is I work for you, the client. So what that means is I can shop around through a multitude of companies and see what product best fits you. Now, most brokers are going to select two to three companies that they generally do most of their business with and work with for the most part, because it becomes difficult to kind of try to keep track of money coming from 50 different places, right? Unless you're putting in enough business. If you got like a call center where you're putting in 50 policies a day, but your average agent will put in 50 policies a year, right? So it's like 2 to 4 policies a month, right? So if if the agent's company name on their business card is the same as on the policy they're selling, they might be captive. You should ask and be sure to compare policies from a competitor. If an agent can only sell for that company, that is a conflict of interest. But even if they are not captive, this should be your next question. Okay? So you always want to ask if they're captive, and then I'm going to tell you what the next question is, question number 3. But now you can see the importance of, and this happens in the African American community way too much, especially with me, and it's frustrating because we go with things based on brand. So often when I speak to people, hey, listen, I'm in insurance. Oh, what company are you with? Oh, I'm with CG Wealth Solutions. I never heard of that company. Oh, well, we're brokers. Oh, okay. And well, guess what? Guess what's a company you've also never heard of? PIMCO. But guess what? If you go look at your 401k statement right now, your 457, your 403b, your TSP, or whatever else you might have, you're going to realize that there's something allocated to PIMCO, PIMCO, the largest mutual fund on planet Earth. But how many people knew that company even existed? So when you show, you work for State Farm, that means that all I can sell you is State Farm's product. So I have to look out for State Farm's best interest, and our conversation has to make sure that I guide you toward whatever product State Farm has that fits you. But guess what State Farm doesn't have? State Farm doesn't have an index universal life insurance. Now they do have universal life insurance, but universal life insurance is not indexed universal life insurance. They may also have variable universal life insurance, but variable universal life insurance is also not indexed universal life insurance. You see how confusing this can get or seem, right? And again, I know a lot of agents. I worked for an agent at State Farm who I got a phone call from another agent who purchased an Allstate agency, and he needed to get life insurance as part of his business loan. But Allstate no longer sells life insurance. So he had to go get life insurance elsewhere. So he called this State Farm and said, hey, I need a quick $2 million policy. Do you guys do collateral assignment? I was like, yeah. So the agent, the owner of the agency, who's been in business for over 27 years and licensed for over 27 years and worked as a fucking underwriter for 13 years. So she's been in the industry of insurance for over 30 years, was like, oh my God, why'd you tell him we could do that? I was like, why did I tell him we could do what? The collateral assignment. I said, because we can. You don't know that. We got to call corporate and check with corporate. Oh my God. I was like, chick, relax. Do you know what a collateral assignment is? Well, no. Okay. So basically, all he's going to do is he keeps his mom and sister as the beneficiary, but he assigns the mortgage company or not the mortgage company, the loan issuer, that if he dies along the way during the policy, let's say he borrowed $1 million and he got a $1.5 million policy and died the next day, that $1 million would go to the loan, and then $500,000 would go to his sister and mom. Let's say he got that $1.5 million policy, lived for 10 years and paid the policy off down, paid the loan down to $500,000 and died. Because that loan is a assignee, then the insurance policy would pay out that loan holder or that loan issuer $500,000, which is what they're owed, and they would pay the mother and sister $1 million. Let's say he lived 15 years and paid the loan down to $250,000 and died. The insurance policy would pay the loan holder $250,000 and would pay his mom and sister $1.75 million. Let's say he lived 20 years and paid the whole loan off and then died. The insurance company, I'm sorry, not 1.75. They would give him the whole $1.5 million. Mahogany, what's going on, sis? And so, ladies and gentlemen, if you're enjoying the content, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. So again, this should be your next question. Number 3, is the insurance company publicly traded? So this is very important, right? And it's literally, most companies, you'll be able to tell if they're publicly traded or not, because they'll tell you with the name of the company. For example, if it's Mutual of Omaha, they are a mutual company, meaning that they are not publicly traded. So what does that mean? A mutual company means that you become owner of the company. So let's look at it in like car insurance. Allstate, which I used to own an Allstate agency in East New York, is a publicly traded company. So they have shareholders to appease. So when I had my Allstate, I had to make sure to hit specific goals, numbers, and quotas in terms of sales. Why? Because, excuse me, that was to, keep the shareholders appeased, right? Now, if we flip the switch and we go to whilst I was working at State Farm, well, State Farm just so happens to be a mutual company. So what does that mean about State Farm? Well, that means that with State Farm, if you purchase a car insurance policy with State Farm, you are not only a customer of State Farm, but you, as a customer of State Farm, also, because you own a policy, own part of State Farm. So they have to do things like send you annual and quarterly reports. Why? Because you partially own the company as just a simple policy holder. So again, this is part of what you're going to start learning here at my channel. Pardon me, y'all. I had to go get me some ice and get me something to drink. But, this is part of what, what my content and content strategy is all about, right? Where else are you going to learn stuff like this that most reps aren't going to tell you, right? They just aren't. Why? Because most of them don't know, to be honest, right? Insurance is a very, very deep game, right? I'm sure, some of y'all may have seen when Waka Flocka Flame went on and said, I'm going to do like the rich people. I'm going to go open me an insurance, put like 2 and 3 million in my insurance and borrow from that and pay myself back. Well, literally, that's what part of this book is that's some of the strategies in this book and many others. One of the books that was recommended in this book that was written in 2020 is a book called The Power of Zero by David McKnight. Because there are four buckets. There's the taxable bucket, the tax free deferred bucket, and then there's the zero tax or the tax free bucket. And what you want to do at retirement is obviously be in that tax free bucket where you're not paying anything in taxes. Let me take a sip of my drink here. So, again, this is why you want to ask if the company is publicly traded. Because it's important to know, right? At the end of the day. So, let's read there. Number 3. Is the insurance company publicly traded? If you're shopping for groceries, it doesn't matter if the store you're shopping at is publicly traded. The price you pay is the price you pay, and it is easy to compare. But in general, if a corporation is publicly traded, they have a responsibility to create profitability to their shareholders. And many times, that profit comes in the form of more charges to their customers. That's simply another conflict of interest when buying a financial product. But most important, when you may own it for the rest of your life. Kev, what's good, brother? Salute to you. Long live. So, the reason that I use both a credit union and a bank is I make them compete for my business. Credit unions are owned by the members, but I also use a big bank for my air miles and rewards as they give me more free stuff than my credit union. In my research, I've found that many of the insurance companies that are publicly traded don't have the best policies, either for term or for IUL. Even in the case of term insurance, if a company is the cheapest, it may be because the policy is not convertible. Now, we went over convertibility earlier. Less claims paid equals more profits for the shareholders. And who builds the risk-free portfolio? Are they publicly traded? Let's take it a step further with an IUL. Some of the smaller insurance companies say they are a mutual benefit insurance company, which is what I was just telling you guys about. But they're too small to build the risk-free portfolio themselves, so they must hire a mega bank to build the portfolio for them. And yes, that mega bank must also maximize profit to their shareholders. This could result in lower caps and or higher fees in an IUL. So he does have a point there. But generally, with interest rates and stuff now, you're not looking at 12%. You're looking at maybe a 9% tops. But right now, I think they're at 9%. Man, that's good. Yeah. But salute, because he actually does come around and support. You know, I've heard some conversations on the back end, but Kev is on some real man shit, and he'll be like, listen, that dude is a grown-ass man. He ain't here to speak for himself. If he was, I'm sure he would. You know, so it is what it is, right? That's why his name is Black Man Being Brutally Honest, because he's brutally honest with everyone. So, number 4. What are the riders and their costs? So riders, ladies and gentlemen, on insurance policies are like aftermarket parts on a car, right? You can get, the new Dodge, but are you going to get the mud flaps? Are you going to get the mud mats so that, when you hop in the car from the beach, you don't have to get a detail. You could just take the mat out, shake the mat. Will that cost? Well, that's what a rider is. It's an aftermarket part or an aftermarket bell or another feature or benefit added to your life insurance policy. Similar to like when they were talking about the long-term care aspect. So you want to see what are the riders and their costs. There are many riders that can be added to an IUL. Think of a rider as an add-on to your car, like an upgrade to the stereo system, or even adding additional horsepower. LTC riders are becoming more common, but many smaller insurance companies don't have this option. In my opinion, you're not getting the maximum value of an IUL without this inexpensive form of asset protection. Some riders, like terminal illness or chronic illness, are free within IULs. Many advance a portion of the death benefit if you only have 12 months to live. As we covered in detail below, riders now exist to supercharge the growth in your IUL cash value for even greater returns. So number 5 question. Is there long-term care indemnity? In the past, traditional long-term care would require not only being very sick, but also that the caregiver send receipts in the mail to the insurance company and request reimbursements for medical expenses. They were called reimbursement policies as they only covered the cost of care. Fortunately, today, the long-term care riders on most IULs are indemnity plans, which don't require sending receipts in the mail. They simply pay a monthly benefit based on the amount of insurance. For example, if a person owns an IUL with a $500,000 death benefit and qualifies for LTC, they can collect 2% of the death benefit in each month. In this case, up to $10,000 a month. The money can be spent however they want. It can even go to a savings account for additional reserves. Yes, you can, Shar. That's very true. There are a lot of good riders. Now, riders, again, they do cost. So it changes. Either it will increase the policy premium or decrease the death benefit. But we'll talk about that. I'll talk about that later because there's a way you're supposed to buy life insurance because the wealthy insure one life at least 7 times. And not all life insurance policies are created equal. As we saw earlier, I went through 5 or 6 different types of term insurance. So, if the insured uses the LTC rider for 6 months, then recovers and no longer needs the help, they would simply turn off the benefit. They would have used $60,000 of the death benefit, and the remaining amount of $440,000 will remain to pay as either a death benefit or for future LTC coverage. IUL LTC benefits typically pay out based on the ability to perform ADLs or activities of daily living. So those are things, ladies and gentlemen, like being able to bathe, being able to go to the bathroom by yourself, being able to eat by yourself, being able to dress yourself, stuff like that. Let's see. IUL LTC benefits typically pay out based on your ability to perform ADLs or activities of daily living. These are things like bathing, taking medication, mobility, feeding, etc. Needing help for 2 of the 5 ADLs will generally qualify you for the LTC benefit. So question number 6. How high are the caps, and are there any uncapped strategies? So this is very important as well. Again, this goes back to, like I said, I've had agents who are like, "Oh, nah, I got an IUL. Just because you have an IUL, don't mean that you even know where it's allocated. Is it on the 1 year point to point? What index is it on? Is it on the S&P 500? Or is it on the BNP? Is it on Morgan Stanley International?" So it's funny because when I don't talk this um, investment derivative stock shit to people, they want to come and try to talk that shit to me. "Oh, can you invest in asset based?" And I'm like, "Look, motherfucker, you can't talk that shit because you ain't got enough money to actually invest in it. It starts with 25,000." And I'm not trying to shit on anybody if you've asked me these questions, but this is the reality of the situation. You're talking to a guy who actually worked on Wall Street, right? So I'm not being cocky, but I'm just coming from it's a level of perspective. I'll give you a backstory. Back in 1998, my now adopted brother's mother died, and I was on the phone with him when he found her dead in the bed. Well, his family was he's half white, half black. His mom was white, and she was from a fairly rich family, but she married his dad, who was black, so they wrote her out of the will and cut her off from the family, and she ended up living here in New Haven, Connecticut, in the hood. Well, when she died, they didn't want her children to go into foster care. So my mother adopted my brother and sister, which was just a homeboy of mine in middle school. But now he's my brother and she's my sister. So from their perspective, I grew up in the hood in the projects, right? But they were rich folks from Greenwich, Connecticut. And so they bought us a house in return for taking them on as our relatives, right? Because we lived in a 2-bedroom apartment. Don't get me wrong, we were in a nice apartment. My mother wasn't doing bad for herself in the early 90s, but by no means could her on her single salary take care of, instead of 1, now 3 kids, right? In a luxury apartment near Yale New Haven campus, downtown New Haven, right? We was living pretty good at the time, but not like them. So before that, I had lived in the projects up until about 3 years prior when my mother got us the apartment in the high rise, right? So when they bought us a house, we didn't know how to maintain a house, so they were looking at us crazy, like, "Why aren't you cutting the lawn? Why aren't you doing this?" We were like, I ain't never seen a lawnmower. Nah, it wasn't cooler than Miss. It was actually very fucked up with them, but we'll I can see, again, perspective, right? Because from your view, well, that sounds cool to them, but long story short, it ended up not being cool. It ended up being very fucked up because they didn't buy it for us. They bought it, and then they told my mother she had to pay a mortgage of $700 a month in the early 90s when she was paying rent substantially less than that. In a nice apartment, nice area, but she wasn't, in the early 90s paying that much for her mortgage. So she went from that to suddenly, damn, I got to pay this mortgage. And then they kicked us out. Their own grandkids. They was like, "Well, your mother's not paying the mortgage, so y'all got to get out." And we was like, "Well, first of all, we thought you was buying us this house. Like, we didn't know you was going to make my mother pay for it." So, same thing here, perspective, right? You got to have perspective when you're talking to your insurance agent, and have them understand the products that they're offering to you. And so, again, there is a perspective. That's why in the middle of each one of these questions, I'm either breaking down what he's going through before he goes through it or right after. And it's because I actually understand and can use these concepts and break them down. So, the most competitive insurance companies. Oh yeah, I found. So most IULs have caps, but only a handful of insurance companies have developed uncapped strategies. The downside with an uncapped strategy is that you won't get the first 5% of the rise in the market, but it will also remove the cap on growth. So if the market rises by 35%, you could net 25%. I found the most competitive mutual insurance companies have the highest caps and uncapped strategies. You may also want to ask, how often has the insurance company reduced caps in the past? Generally, most agents won't know that. I don't even know that because that's not something we're going to study. That's something they can get you through the annual report. That you would ask an actuary, right? Because we have to know enough about the product itself, not about the changes in the product per se. So question number 7. Does this IUL have alternate loan options? IULs traditionally have had only fixed rate or traditional loan options. Fixed rate or traditional rate option, loan option. A fixed rate loan is where you can borrow from your IUL and pay 2 to 3% interest. At the same time, the insurance company takes the amount borrowed out of your cash value and places it in an interest-bearing account where it also earns you 2 to 3% interest. In effect, you're paying very little or no interest for borrowing that money. But in doing so, those funds you borrowed don't participate in any of the upside growth of the market. It is easy to think of this like a withdrawal, although you're taking a loan. Let's say you had $100,000 in your IUL and you wanted to take a fixed rate loan of $50,000. You receive the $50,000, no taxes, but your policy cash value is reduced to $50,000. The participation you have for any growth in your IUL that year is only on the remaining $50,000. If your IUL earned 15% that year, it would only be credited $7,500. The other option is a variable rate loan or participating or alternate loan option. This means you'll pay an interest rate on the loan, perhaps 4 to 5%. But your full cash value will remain in the markets for any potential growth. So, in this case, if you had $100,000 in your IUL and you borrowed the $50,000 using the alternate loan, you will receive the $50,000 again tax-free and still have the full $100,000 in your IUL participating in any upside that year. So when borrowing $50,000 at 5% interest, at the end of the year you would owe the insurance company $2,500. But if your IUL earned 15%, the insurance company would credit $15,000 in your cash value. That $50,000, which remained in your policy, earned you an extra $7,500 that year. Would you like to pay $2,500 or earn $7,500? Basically, you earn $5,000 because you got to pay back that $2,500. This is the power of OPM, other people's money. It's all in your real estate book. And more good news is that the interest you owe can be paid straight from the gains in your policy's cash value. If you want to build your own tax-free family bank, you must have both fixed and variable alternate loan options available in your IUL. Then you can decide when taking the loan. Do I want a fixed rate option and not participate in the market? Or do I want to borrow at the 5% rate and keep all my money growing in the potential upside of the market? So I've been going for a minute, guys. I'm just going to read. Oh, wow. All right. Oh, there's actually 2 extra chapters in this book. I didn't realize it. I'm just going to finish questions 8, 9, and 10. I'm not going to do any soliloquy in between. So 8, cost versus benefit. Can I supercharge it? So think of a rider like upgrading your stereo system, or in the case of an IUL, supercharging the IUL by adding horsepower. For Tesla lovers, it's the ludicrous mode. I've only found one insurance company where you can pay a fee to supercharge your IUL to have far greater upside, potentially twice that of the market return. If you don't want the extra fee for that additional performance the next year, you can turn off the rider. Using this feature wisely and weighing risk versus reward, it can translate into far greater tax-free profit. Always ask when looking for an IUL. Are no-cap strategies available? Can I supercharge my IUL for greater growth potential of the market? Number 9, surrender schedule. Is there a prenup? This is the fees they're talking about. So the fees are surrender charges. Basically, they put pain in the program if you put your money in and take it out too soon. People don't understand. Insurance companies generally lose money in the first few years. First, they have to do things like pay your doctors for your medical records, $600. Then they got to pay for your motor vehicle record, pay for your prescriptions, pay for the medical examiner to come out. They got to pay the insurance agent their commission. They got to pay the underwriter for doing their job. So they pay out, and they really don't receive much, right? And then let's say you pay $1 million premium for your $1 million term, and then the next day you die. Now they got to pay out $1 million. This is a legally binding contract. So you can see how things can topple over really quick. So, that's why they definitely protect their investment as well as an insurance company, because, they do spend a shit ton of money. And this is also why a lot of advisors push towards term instead of permanent, because 98% of term policies never pay out. And remember, term policies, for the most part, aren't return of premium. So for the most part, you hurting people to something, they're just going to shove money into the insurance company, and then at the end be like, oh, sorry for you. You could call Alex Trebek and get $9.95 per unit and get a $5,000 death benefit. And like my grandmother, who's been paying for a policy for like the last 12 years, I calculated her payments. She's paying the policy $7,980. The death benefit is $7,500. If my grandmother died last night, she's paid more to the death benefit into the life insurance policy than they're going to give us in the death benefit. But that's pretty good that people put themselves in with their proper planning. So, anyway, off of my soliloquy, I said I wasn't going to do them. But this just goes to show you how much I grasp this insurance shit, right? That's why I'm your all-star advisor. It's kind of like Kobe Bryant. Kobe Bryant was obsessed with basketball. That's why we have a whole Mamba mentality, right? That's why they retired both of his jerseys, right? 8 and 24, So, surrender schedule. Is there a prenup? If you're getting married to an IUL, you'll also want to know how long you're stuck with the IUL. Simply ask, how long is the surrender period before I can move my money into a new IUL? The good news is that money can be moved tax-free from one permanent life insurance policy to another, even between different types of permanent insurance policies. This is called the 1035 exchange. So if you bought an old whole life, universal life, or variable universal life insurance policy more than 10 years ago, you may want to look at the options for moving your money to a newer policy that has much greater benefits. And question 10. And this is funny because one of my followers, she's not here today, was asking about, I had mentioned about this thing called premium financing, which is taking a loan out to get your life insurance policy. So, 10, what are my options for premium financing? So, premium financing is when loans are taken from banks to fund IULs. This is another form of OPM and can be very effective for buying larger IULs. But this requires highly specialized expertise to know how to properly design and set one up. Again, most people don't even know that premium financing exists. And I'm not talking about your average everyday American. I'm talking about your friend who works at Primerica, who's a RVP, who always gets these trips to Belize, who gets a BMW. They, because they like, oh, I sell insurance and I got my Series 6. They don't know about this shit. Excuse my French. But premium financing is when loans are taken from banks to fund IULs. This is another form of OPM and can be very effective for buying larger IULs. But this requires highly specialized expertise to know how to properly design and set one up. All the factors above will come into play as well. What are the costs to borrowing the money? And when is the IUL likely to pay back the loan so I don't have to? Again, premium financing is only for the Henrys, manosphere term, high earner not rich yet, HNW or high net worth individuals, and UHNW, ultra high net worth individuals. Your IUL can bring you great security and tax-free prosperity all at the same time. Now, if you had decided that an IUL might be right for you, would you like to practice your wedding vows? So let's practice our vows and then I'll close out, folks. Your vows. I, state your name, take you to be my IUL, to have and to hold, and to keep you in a safe place from this day forward, for better or worse, in good markets and in bad. You will make us money, but not lose any, regardless of how bad it gets. And in tight times, if our income falls short, you will help keep us safe with tax-free distributions prior to age 59 and a half. And in richer times, when our income rises, you will grow our net worth, exempt from all state, federal, and capital gains taxes. In sickness, you will protect us with long-term care to protect our assets, and in death, you protect our investments from taxes. But until death do us part, you will grant us tax-free loans to invest using OPM, other people's money, which we would cherish and use wisely to invest again in real estate and other appreciating assets to help us grow, protect, and pass on our wealth to our families that we love very much and to the charities that we support. IUL, do you accept? I do. Wealth supremacists and champions, do you accept? I do. All right, that's it, ladies and gentlemen. So, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day and see success. And remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.